It gives me great and extraordinary pleasure now to bring on board the DIPAM Secretary of India, Mr. Tuhin Kanta Pandey on ET Now. Secretary Pandey, always a pleasure to have you on ET Now. Thank you for joining us. I know these are very busy days. Budget has just got over, Parliament is on, and you've managed to find some time in the middle of your working hours, so really appreciate that. Secretary Pandey, is my voice reaching you?
Yes, sure. I can hear you.
Wonderful. So nice to have you, sir, on ET Now. And I'm just going to set the tone for the interview. The primary objective of DIPAM is value creation. And if there is one casebook success story which we've seen in India, is a resounding success of how PSU stocks or PSU companies which were at the bottom of the barrel in terms of valuations and market respect, now they're enjoying premium like never before, excitement and participation. So I'm sure, Secretary Pandey, secretly you must be happy and delighted with the way the good work of government and your department now seems to be getting recognized.
Well, I think there is no room for complacency because we have to keep working hard at performance.
Secretary Pandey, one lens in which the DIPAM work was always benchmarked was the disinvestment number. And that is one number which is a moving target. But today I'm going to phrase my question differently, which is that purely looking at the valuations of some of the government undertakings and especially PSU undertakings, do you think it is good time now to start what could be called as systematic offloading of government companies, at least the one where valuations and the recent run-up has been strong?
Well, I think let me just slightly give you a peek into the holistic public asset management strategy. There are actually 5 elements to it. The first one is the performance, because I think that is fundamentally, that's the key to any sort of value creation. Because I think these are the outcomes of the hard work that you put in terms of top line, bottom line, and some of the financial ratios that we have emphasized and sensitized the management of the CPSCs on this, and also trying to align their incentives around it. So the performance is the first element. The second element I'll like to highlight, although is a part of performance, but very distinctly a focus of the government, is Capex and growth. Not only the CPSC contribute up 3 to 3.5 lakh crore annually to the Capex from their own resources, but also they have performance metrics have been aligned to Capex and growth. They are being encouraged to do that. That brings to me the third element, which is the consistent dividend policy. In consistent dividend policy, our emphasis is that the CPSCs, they are profitable on consistent basis, and they are also share a part of that profits after tax with the investors consistently. Again, it's a distinction. I mean, we are not really trying to maximize dividends, although put together we received more than 63,000 crore dividend receipts from CPSCs alone. I'm not counting the banks and the financial institutions in the year 23-24. But nevertheless, the emphasis is not on maximizing dividend because a lot of that profit after tax after dividends has to be retained and then invested in growth. So it has to be consistent with our, as I said before, the Capex and growth element. The fourth element, which is important part, is communication of that performance. We have been laggards in this direction earlier. I think CPSC executives are increasingly shedding their reticence and shyness and trying to communicate with the markets as the opportunities go, especially when there are opportunities like results, as also many a time when they unveil their plans and they discuss this with a variety of market participants. And the fifth element I would that will bring up to a calibrated disinvestment strategy, because disinvestment strategy can't be really the driving force of the whole value creation, but it will certainly be a part of it as that value creation also is discovered in the market, and unless and until we disinvest in the markets, we don't bring those stocks to the markets and we don't deepen the stock markets, we also don't enable the value creation in the CPSCs. So disinvestment is an essential tool, so to say, in value creation, but it is subsumed into the holistic value creation strategy, and it's not really the focus.
Okay. So if I have to read in between lines, can I say that in FY25, irrespective of the current underlying valuations in some of the government companies or PSU enterprise, government is in no hurry to start any OFS process, or government is in no hurry to reduce the ownership, and the supply in the market is not going to be large?
Well, I won't put it that way in because it has been ongoing process. So I think the word start I don't agree with, because disinvestment has been an ongoing process, and market dilution keeps taking place depending upon the need, the timings and so on. So I think that will continue to be, as I said, calibrated disinvestment strategy, and we do have sort of a responsibility of dilution, especially in those areas, those companies where the market float is less, and so therefore consistent with SEBI norms, etc., we will have to dilute, but again in a calibrated fashion.
But are you aiming at OFS stake sale higher than FY24, or will it be lower than FY24?
No, as I said, that it is an opportunity based, and also the it is to some extent opportunistic, I would say, because we have to you have to look at every CPSC in that fashion. So I would not really comment on the numbers or the strategy, but except to say that this is an ongoing process. It has been going on. We have had several OFSs also last year, and we will continue to have so, but consistent with our strategy, not to create any overhangs.
But allow me to pick two words from your last answer, which is need and timing. Could you define, when you say need and timing, what exactly are you indicating or reflecting at, sir?
I would say that the need is also that one need is more focused on sort of what is the level of float which is available. So obviously I think there is some minimum float requirements that we need to comply with, and I think in the last year also several of these companies we had I think at least 4 companies were brought to minimum public shareholding last year. We do have flexibility, a little more flexibility, not a very, I would say, very sharp timelines, but nevertheless, the larger float always helps the market, and so is our intent. Again, the timing has a lot of issues, like for example, how are the companies rolling out their Capex, what is their how the markets are perceiving, what are the likely projects which are going to come on stream. So I think it will really be, the opportunity would also let us to really explore those options as well.
Secretary Pandey, the last big government issue was IRDA, and that has found a resounding success. Ever since it went public, the stock is up 7-8 times. It has created serious shareholder value. Are you looking at any more listings this year, considering that right now there is a renewed vigor and interest in PSU undertakings?
Yes, I think the listings will continue to be a priority, but that CPSE space will be more like where GOI is not directly the shareholder, but subsidiaries of several of those companies, especially green subsidiaries. I think NTPC is very seriously looking at NTPC Green, IPO in this year.
NTPC Green, which the DIPAM or your department is actively involved in advising other PSUs?
Yes, indeed, because we have been able to, for the green transition, many of those companies have been actually, have created subsidiaries and trying to bring the green assets, also have growth trajectories for several of the green projects being rolled out under these subsidiaries. And in their own right, they could be, hugely value creating in the current environment.
Secretary Pandey, I'd like to remind our viewers, in the last conversation on record, you said that the ball is already rolling on the IDBI Bank disinvestment and some regulatory clearances are required and you're waiting for necessary clearances from other government agencies. What is the status on that, sir? Have you got in principle go ahead from of fit and proper criteria from other regulators?
Yes, we are moving ahead on that.
So you're confirming to us that you have got in principle approval from other regulators and now the decks are cleared for IDBI Bank disinvestment. Can I assume that?
Yes, I mean, from the regulatory angle of RBI, we are moving forward.
Okay. And when do you think the next course of bidding will start and what would be the process now that you got the RBI approval on IDBI disinvestment? What would be the next process of protocol which would be followed?
See, the process is that, the shortlisted bidders who have been, considered fit and proper from the RBI, they will be, sort of doing the due diligence process under the non-disclosure undertaking. That means a deeper analysis on the banks and other things. Following which, after the documentation and the draft, terms and conditions are agreed upon, then only the financial biddings will be sought from the shortlisted bidders.
I'm just moving to another topic with one more follow-up question because it's the DIPAM secretary who is now perhaps hinting on the way the divestment process of IDBI Bank is moving. So can the process finish in FY25 or it could spill over to FY26 as well? I'm only specifically talking about IDBI Bank.
I will say that, we are hopeful of financial bids in this financial. I don't know whether the process would be fully completed.
Do you expect a similar kind of an acceleration in some of the other divestments where in principle cabinet approval was there? For example, SCI, BEML, do you expect those other in principle cabinet approved disinvestments also to be accelerated going forward?
See, as such, we are pursuing all those disinvestments wherever the ongoing cases are there in life. But I think we do have challenges and we keep on addressing those challenges. In both the cases you mentioned, we had demerger as a challenge of core non-core assets, which were the transactions in their own rights, separate transactions in their own right in terms of demerger process, because listed companies, it involves a lot of work in demergers. Having achieved it, we have some of the other minor challenges to be sorted out. forthwith, and thereafter I think we would be in a position to take it to further thing. And how much we will be able to conclude successfully, we will let you know as it goes.
Secretary Pandey, I distinctly remember last year when we met in October and you said that, look, we are committed to create value in the insurance sector. And the stock of LIC and other PSU, state-owned PSU stocks were languishing at the bottom of the barrel. Markets are realizing the true potential of that. But do you think you are committed to create value even in state-run insurance companies? Because that's one space where there is interest, but there is perhaps a little bit of push required in, when it comes to value creation.
I think Department of Financial Services is quite looking into a lot of issues and their value creation and how their performance can be improved in the other three general insurance companies. As regards GIC, it is fairly strong at the moment and continue to move forward.
There are two big changes, Secretary Pandey, which have happened in last 3 or 4 years. One, no longer government is merging one government entity with the other entity. For example, I'm just bringing this for the benefit of our viewers, sir. An example, HPCL and ONGC, PFC and RSC. Can I say that there is going to be a complete consciousness when it comes to no more merging of government entities, this in terms of cross-holding?
Well, if you really say so, technically I think those are not mergers. Like ONGC is sort of having a say. I mean, HPC is now a subsidiary of ONGC, but technically they have not merged. Similarly, I think the REC is a subsidiary of PFC, but they are not merged. But yes, you are right that they are cross-holding because they are subsidiaries. The government stake has been sold out to ONGC and PFC respectively. I would say that any such thing, we would, as I said, that we have slightly delinked this process from the fiscal receipts. Because if you are really fiscally always looking at high targets, then obviously some of these easy pickings will be picked up. They may not be really fully consistent with the sort of value creation in the long run. So we would say that having now focused and emphasized on value creation strategy and not really having a strategy which is linked with the achieving fiscal revenue. Even on that side also, I think disinvestment receipt was the only one which was being focused upon. Not as much as the dividend and other funds receipts from the CPSEs. Now in the holistic sense, we are looking at total receipts, one, and secondly, we are not really trying to really achieve a target in order to do that. So we would be quite mindful of the way market perceives the value creation, and quite consistent with the interest of minority shareholders in that. So it would be that approach, and if it is seen that the mergers would be beneficial and if it is feasible, mergers has other issues as well, whether we can sort out the HR issues there. So I mean, sometimes the mergers they have advantages, there could be disadvantages too. So you have to also look at practical and pragmatic consideration whether any merger would be beneficial in the long run for shareholders.
I'll take the liberty of extending my appointment by just 2 more questions, and I'll go back to the pillars which you identified in terms of where the DIPAM's focus area is. And 2 pillars which you spoke about was dividend and Capex. What is your understanding on how Capex for FY25 for PSU undertakings is likely to move, both by internal accrual or by external borrowing? And B, what is your assumption of dividend, the basket of dividend for FY25?
Well, I think in both fronts, we would continue to be, sort of a focused approach in terms of thing, because Capex helps also the CPSE's growth, but Capex has to be done in a manner where we do have sales turnover coming as fast as possible. So we have to be also mindful of executing the Capex projects efficiently. I think diversification is also happening. As I said, that many of the oil companies and coal companies, companies and thermal energy, they are having a lot of green Capex which is happening, and that will continue to be going forward focused area for growth. There are good indications that Capex growth is proceeding smoothly, and I think we will be targeting something like 3.5 lakh crore as the Capex from the CPSEs this year. And dividend, as regards dividend, we have a certain dividend target, but point is, dividend will again depend upon how the markets are, what is the profitability are. Given our focus on performance and expecting that our growth in Indian economy will be robust, I would expect that we would have good healthy dividends as well. But as I said, that we are targeting the value creation as a strategy, and everything is subsumed under it.
So Secretary Pandey, I'll summarize our today's interaction, and I'll be slightly repetitive with this one because this is of immense market curiosity. And what you are perhaps indicating and suggesting, that even though PSU stocks or CPSE companies are trading at record highs in terms of their market price, the government and your department right now is in no hurry to offload their ownership in the open market via the OFS. Whatever will be done in a very judicial manner, and that is a commitment which is coming from you.
That's right.
Okay. Thank you very much, Secretary Pandey. Always a pleasure. Thank you very much. And once again, I know it's very busy time for you. Budget has just got over, Parliament is on, the finance bill would be tabled, and you've managed to find time. Thank you very much, sir.
Thank you.
Well, big exclusive on ET Now today, the DIPAM Secretary. For me, the key takeaways are, number one, no disinvestment target in terms of a fiscal assumption. So there is no pressure. Second, Capex number of 3.5 lakh crore. Dividend, there is no hurry by the government in order to really increase the supply of some of the government paper where ownerships are between 75 to 80% or even higher, even though the stock prices are at a record high. And in terms of a specific news, well, guess the regulatory approvals from RBI, or the necessary approvals of fit and proper criteria from RBI has been received. The department is confident of receiving financial bids in FY25 for IDBI Bank. So that in a sense becomes this big stock to watch. Now let's take a break.